welcome to Morning Trade here live on Moneycontrol. I'm Stacy Pereira and I'm here to help you navigate through this trading day, give you actionable trading strategies, which are the sectors that are doing the rounds, that are doing really well in trade, and most importantly, all of your queries will be answered during the course of the show. So do keep up with us and keep your comments live there on our feed, and we'll have them addressed by our guests on the show. But before getting you all of that and before we get across to them, let's see what we're getting from our global handover. Well, the US 10-year treasury yield has slipped back below 5%. The Dow Jones breaking its 4-day losing streak as major indices surge on the back of those strong earnings in the US. Asian markets have trading mixed this morning on the back of that strong handover from Wall Street. The GIFT Nifty is implying a mildly higher start for the Indian markets after yesterday's break. If you look at commodities, crude oil prices have slipped for the third straight session. Brent is trading now around $88 a barrel as weak economic data from Europe weighs on the outlook for demand. Meanwhile, cryptocurrencies too are seeing some big moves. Bitcoin rallies over 8% and tops $35,000 for the first time since May 2022. The currency is also doubled in value in 2023. And among the key major earnings today, Axis Bank is likely to see its Q2 numbers come under pressure on declining net interest margins in the second quarter, whereas Tech Mahindra also is likely to deliver a weak set with revenue growth seen declining for the second straight quarter as the communications on vertical comes under pressure. Deal wins too are also likely to remain quite muted. And from the startup space, we have Byju's CFO Ajay Goyal, who quit barely 6 months after joining the edtech firm. Moneycontrol has learned that the company insider Nitin Golani will be taking charge as CFO at Byju's, whereas other veterans like Pradeep Kanakia will be roped in as a special advisor. Goyal, meanwhile, will be heading back to Vedanta to help them with their recently announced massive demerger. Well, there's a lot happening across globally in the markets there, especially the bond markets where we've seen quite a bit of huge swings. But if you just go by what we saw yesterday, where we did see the 10-year treasury bond reach that lowest level in last 16 years. And this came after we also saw a couple of tweets coming in from ace investor Bill Ackman, where he says that there's too much risk in the world right now and that is likely to trickle. He had put out a set of 3 tweets, which also resulted in that bond market seeing quite the opposite of what it has been doing in all of these days prior to this. We saw that 30-year treasury fall below that 5% mark that we've been looking at, those record levels. Now, what really led to the surge? Remember, it had touched about 5.18%, the highest since 2007, and those are the levels that we are actually going by. So now the fact that, we're seeing a direction change when it comes to US treasuries, and that pretty much going to change what we're going to see in the markets here as well, because that has pretty much been that guiding force so far that we've seen take equity markets also to where it is right now. Yes, we are coming back from 3 sessions of losses there, pretty much a bloodbath we saw on Monday after that holiday. But let's see what we have the trade set up for today and what that is going to look like. And joining me to give us the overall fundamental picture at this point is Nikhil Oswal, the founder and director at Finterest Capital. Thank you so much, Nikhil, for joining us on the show this morning. Well, let's get a sense of, we spoke about US Treasury yields and how that has been changing over time and how that has really changed the picture, we could say. But how is that going to change and bring an impact here on Dalal Street? Are we likely to see that follow up even here, what we're seeing in markets, or we can say that bears now somehow have taken control on Dalal Street?
So good morning, Stacy, and good morning, viewers. So we saw on Monday that small and mid caps were falling like anything. We saw 3-4% of fall on the index level as well. So primarily this has happened due to 3 reasons. First is your bond yields, which breached 5%. And after 16 years, we saw this happening in 2007 when this happened for the first time. We saw Lehman crisis coming in, right? And this is what people are worried about. There may be some economic crisis that might happen. Then your second reason is, of course, the war, which is escalating, and markets are anticipating and are a bit nervous about war getting escalated and major economies getting involved into it. And the third reason is Brent oil, crude oil, which was above trading above $90. So all of these are major economic factors which are making market a bit nervous, and investors are seeing this kind of fall happening. But bond yields have cooled off a bit. It reached 5%, last week, and we have seen coming back to 4.8%. So that is a positive sign. And also, if you notice, FIIs have, for them, for equity, the major enemy is bond yields, right? After war, also the major enemy is bond yields. So, FIIs will pull out their money. I mean, they've just started investing back in India a few months back, and again, they are taking out their money. In last 2 months, they've sold around 40,000 crores. So, but India remains in a sweet spot. That is for sure.
Also, do give us your view on crude. You did mention that, a lot of it, especially for an import-heavy country like India, would depend on those prices. And there also we've seen big swings coming in. But now going back below that $90 per barrel, is that a good comfort level for India as well? And could we see that change in terms of how our OMCs really put out? We're also getting into an election year, and those fuel prices have always been something that people, see those changes when we come closer to an election. So how much of that is going to really change?
See, of course, if we remain below $90, it is always positive, because 90 levels are. It's a sentimental level, right? So we shouldn't breach 90 levels and sustain and go beyond that. Of course, if the war escalates, we might see Gulf countries, involving into it. So, that is a major risk. But otherwise, below 90 levels, we are comfortable, and it's good for our country.
Right. Well, of course, it is good that we have crude oil there in our comfort levels. We want them much lower as well. But for now, we're happy with the fact that we do have crude oil that is supporting us right now. Let me also go across to Kunal Rambhia. He's joining us. He's a fund manager at the Streets, and he's going to give us a technical picture of what we're likely to see on the charts going ahead, because we've been seeing quite a bit of, I wouldn't even call it consolidation, because markets have really retreated, and we are saying that we could even go down to those 19,000 levels, because we've already breached that crucial 19,300. So could you give us a sense of what we're looking at the levels for the Nifty? And I'll come back to you for Bank Nifty, but first, what levels are you looking at for the Nifty at this point, both support and resistance?
Yeah, hi, morning, Stacy, and good morning to everyone. So if we look at the Nifty, so, the interesting observation right now at the present level is that we saw a massive breakout somewhere in the first week of July. To be precise, it was the 1st of July itself where we saw the breakout, and that breakout level was 19,250. Post that, Nifty actually went up to 20,000 plus levels, but we saw this 19,200, 250 kind of levels getting retested 3 times. And in fact, if you check the Monday's closing, it was again back to 19,280 itself. So for now, on the Nifty spot levels, 19,250 seems to be the strong support level. 50 points plus and minus, we need to just be a little flexible at this level. But if Nifty manages to hold these levels, I don't foresee any major problem coming from the present levels. And in fact, from here, if the bounce emerges, we can see 20,000 levels coming again. But by any chance, if 19,250 is broken below, then yes, 18,400 kind of levels might just turn up on our screen.
Right. So that range is quite wide. What you are suggesting that we could get back into those 20,000 levels again to see. But also let's talk about the Bank Nifty, because that one closed below the 200 DEMA, and this for the first time since March. So we saw 500 odd points cut coming there, almost 1.31% lower when it closed on Monday. Below that 43,000 levels if you have to see, and that selling pressure is likely to, it's not ruled out. We are perhaps going to see that further, and we did have a slew of bank earnings that came in, which could have been one of the triggers. But for the bank Nifty, how are we looking at the charts there, and what could be the levels to be looking out for there?
So rightly said, yes, there has been some kind of, up to some extent, the disappointment on the results front. But if I look at the Nifty, Bank Nifty technical front, so since May 2023 so far, Bank Nifty was in a broader consolidation zone of around 43,500 to around 46,000. And this 43,500 to 43,000 was tested again 4 to 5 times. On Monday, we saw that breakdown happening in, and right now Bank Nifty is trading at around 43,150. The levels to watch out for on this index will be 43,100 to 43,000. That's the zone which one needs to keep in mind as a support. And again, if it's taken care of, then immediate bounce till 44,000 is very much likely. We need to re-monitor and revisit the level again near to 44,000 and see whether this consolidation continues, or we might see the further downfall coming in. So for now, 43,100 on the lower side and 44,000 on the higher side to watch out for.
Right, and as we're talking about banks today, one of the key earnings to be looking out for is going to be Axis Bank, and what we are getting from at least the brokerages and what we've gathered so far is that likely to see a modest kind of profits at about 7% year on year, that kind of growth. But what is going to be under pressure, of course, is the margins, and that's what we're seeing in most of these other banks also that have reported their numbers so far. NII, though, could increase at about 15% on a YOY basis. So let's quickly get, because a couple of queries have also come on Axis Bank and how one is supposed to be looking at it and the banking sector as a whole.
So if you look at the overall formation again on the bank, on the Axis Bank, right from the March low till now, it was making a clear higher top and higher bottom. And in fact, the immediate support was on the chart at near to around 980 levels. It broke that level decisively on Monday itself, and it came down to 964. Immediate support on the chart is now 960. Failing to hold this level, I think we can see the downward pressure till around 920 to 925. But if it holds in this 960 levels, then I think again a bounce till 980 to 990 is very likely, because we are heading for this event. Just keep these two levels in mind, which is 960 and on the higher side 980 for the traders. But for the positional guys, I think these levels are again comfortable and one can comfortably hold the position.
Right. Let me also get in Nikhil once again and get his sense of what we saw with the mid-cap. Quite a meltdown that we saw there. But it was before this, if you look at mid-caps last month, we've seen quite a bit of rally, both the broader markets, in fact. So is that space now to be threaded with caution, you would say, or how, should we be looking at large caps again in the Indian market context?
Okay, so we've seen a tremendous rally in last 4 to 6 months, and what happened on Monday was FIs and DIs both were buyers. Okay, it was retail plus HNI selling that we saw on Monday, and relatively the volumes were quite low comparatively to other sessions. So I would not see a lot of fall continuing from here. On RSI levels also, mid cap and small cap have cooled out quite a lot, and it has come to 38, 39 levels. So I think we should see, it was a regular profit booking after this rally. I think we should see some kind of regain again. And of course, at Finterest we are always 100% invested, and there are some good sectors which are looking good at these levels. So yeah.
Well, okay, we'll look out for how to be navigating those, but let's get a couple of queries answered at this point, and let me bring Kunal for that. We are getting a couple of interested people who want to know your views on a couple of stocks right now, and mostly some of them coming in from the auto space. Well, Sai Kumar is asking on Bajaj Auto. We did see that stock rally quite a bit after its earnings. It put out a good set of numbers, really setting the ground for auto stocks. But what would be your lookout now for Bajaj Auto at this point?
See, Stacey, again, we saw a massive breakout on this counter near to around 5100, 5150 levels, and the counter went up to almost 5500 levels. Certainly, the negative sentiments will always bring in some kind of profit booking. But if you look at the trend of the counter, then definitely it's very positive. It's clearly making higher top, higher bottom, and the strength is really good. So I think even if there is a decline to say around 50 to 50 kind of levels, I think I would say buyer on this counter, and buy on dip is the strategy which one needs to adopt right now. I think the support level to watch out from the positional point of view is going to be 5100. Below 5100, I think we need to turn cautious. But till then, I'll keep on buying this counter on every decline.
Right. So Bajaj Auto looking quite attractive at this point. Now, the other earning that we were talking about is going to be Tech Mahindra, which is going to be putting out its numbers. But it seems like it's going to be a dull fiscal or second quarter, at least for how it has been for most of these IT companies. A Q2 net profit is expected to decline on a year-on-year basis, whereas revenue is also likely to remain flat. So in terms of their verticals, where we've seen delay in that telecom revenue as well as weak discretionary spends, which has really pretty much shaken things for the whole IT basket as a whole. So let's bring in Nikhil at this point to give us the sense of, because a lot of IT really is dependent on what's happening in the US, where the money is really moving in, how FIIs are reacting, and like I mentioned, discretionary spends for IT companies have dwindled over time. Headcounts have really fallen if you look at all of the IT companies that have put out their numbers so far. So Tech Mahindra, will wait and watch how those numbers come in, but how is one to be looking at the IT sector?
So IT, I think for some time is going to face some challenge for sure. Giants like Infosys are, giving a commentary like they are downgrading their growth and everything. So it is going to face challenges due to a lot of businesses dependent on the US. And we are facing how the US is also witnessing how US is, facing the, economic challenges. So it might be difficult to say right now, but for a quarter, at least we see that IT is not going to perform for sure. And if you see mid-cap ITs are comparatively doing better. We saw small cap ITs are doing better than the large cap ones. So I think if we want to shift, we can look for those companies as well.
Right. So we could keep a cautious view for IT at this point. Mid-cap IT, though, may have some bit of relief at this point. Let's look at what stocks are going to be buzzing today in trade. One will definitely that be of Reliance Industries, where there is buzz and sources are telling Bloomberg that they are nearing that cash and stock deal to buy Walt Disney's India operations. Now, this is going to be huge because Disney may be looking to sell a controlling stake in Disney Star, which the business is valued right now at about $10 billion is the valuation that they're looking for. And Reliance is looking at the valuation at somewhere between 7 to 8 billion at this point. So those negotiations, we are given to understand, are happening right now, and that is why we could see this stock quite a buzz in trade. We are getting to hear that the acquisition could also be announced anytime as early as next month. So Reliance Industries is going to be in focus, and so another stock that will be in focus will be of Vedanta, and we're getting a couple of queries that are coming in here also, people asking on Adani Ports as well as Vedanta. Now that one, after that demerger announcement, has seen quite a bit of swings, we could say. So let me get in Kunal's view on Vedanta and this whole infra metal pack as a whole. Vedanta now also announcing that Ajay Goyal is going to be reappointed as its chief financial officer, and Ajay Goyal was at Byju's just before this, but with effect of October 30th, he's going to be back and looking into the whole demerger of those 6 business units that Vedanta has decided to. So let's get a view from Kunal on Vedanta as well as other infra stocks in general.
So if we specifically speak about, say, Vedanta, now historically, July 2022, counter made a low at around 205.6 levels. And from there, we saw a massive bounce coming till around 340, right? And again, when it cooled off, it's back to this 205 levels. Just, I think, couple of weeks back only we saw the levels. Right now, it's trading near to 215 levels. So again, in technicals, we give a lot of importance to the previous high and the low. So considering that particular observation, I think 205 can be a good support level to watch out for on Vedanta. If it manages to hold these levels, I think then a sideways consolidation is more likely. Immediate bounce we cannot expect for now because there are no signs at all. But yes, we need to be cautious on the selling front at the present level. If someone is holding the shorts, trail the stop loss to around 215. And if someone is looking out to accumulate the counter, watch out for the levels of 205 for the same.
Well, I hope that answers Rajesh Sharma as well as Rocky Saldana's queries on Vedanta. But we do have one more coming in from Raj Nehlani. He wants your view on Voltas. Now, that one also put out its numbers sometime earlier, and we did see some bit of reaction on that stock. It wasn't very positive number there, but we're also getting, there is a sense that the AC or that segment of consumer durables is likely not going to see much growth from here. At least a couple of reports that have come out in that on that front. So, what is your view on Voltas at this point?
Stacy, we are very bullish on Voltas. The only reason being, since October last year till now, the sideways consolidation is seen on the chart. Yes, the broader zone has been around 800 on the lower side to say around 920 kind of levels on the higher side. It's back to those 820 levels. For me, it's a very attractive bet from the long-term point of view. So if someone is looking out for a positional trade, one can definitely accumulate at the present levels. The stop loss is going to be 750. That's pretty far from the levels. But at the same time, the targets which we are watching out on the higher side are almost 1050 to 1100 kind of levels. So yes, it's a bargain buying opportunity for now on the weekly chart. One can definitely stay invested.
So bargain buying one would see for Voltas at this point. So that's the view coming in from Kunal. But let me go back to Nikhil and ask him about what S&P Global is saying. They are saying that India could surpass Japan to become the second largest economy by 2030. Now this obviously comes this in the Asia Pacific region at least. So we are seeing those. Everyone is really bullish on India. We've been seeing how India has really been resilient through all of these global crises as well. If you have to look at the India WIC index, that one also quite telling because it has been pretty unfazed, going below that 10 level as well, what we talk about. So how are you looking at India position amidst all of this global turmoil?
So India is going to remain in sweet spot for sure. I mean, we are witnessing the kind of GST data collection is happening month over month. It is every month we are seeing new figures coming in. That itself indicates how strong the economy is. Then also, if you notice, the SIP flows have reached 16,000 crores. So notice one thing, today in India, we have around 4.5 crore unique mutual fund users, which are giving us 16,000 crores of SIP monthly. Now imagine if this figure of 4.5 crore goes to 8 crores, we will see a monthly accumulated value of 30 to 40,000 crores of SIP coming in India. And that is going to happen for sure. So understand, every month, every day, we will be able to have a capability of buying around 1,500 to 2,000 crores by domestic flows itself. So the retail and domestic participation has been very strong. Our dependency on FIs is reducing as well. And if you notice the ICICI World Cup that is going on right now, that is India is the biggest beneficiary of that. In 2036, India is in talks of hosting Olympics as well. This will bring a huge, significant, phenomenal growth in the realty and infra segment as well in India. So India remains in a sweet spot for sure. There's no other economy which is growing at 7-8%, right? So, and for last 20 years, India has been the second highest performing index after Brazil. So, we will surpass that as well. I'm very, very bullish on India.
Well, that is pretty much a sentiment all across. But just before we wrap, let me bring in Kunal Rambhia once again to give us his stock picks and sectors that he finds that are looking attractive at this point. Kunal, what do you have for our viewers?
So Stacy, here I'm going to share 3 counters, and those are going to be positional trades, not just for the intraday, probably for a week from here. The first is the Reliance Industries. If you look at the chart, it's available right near to the support, and it's almost at the 61% resistance retracement level compared to the previous rally. So considering that, I think this can be a good buying opportunity. Stop loss being 20 to 50. One can go bullish on Reliance, and the targets can be around 2,300. The second is Emphasis. Again, we saw massive correction in the IT segment, but I think it's overdone as of now, and it's due for a decent bounce from the present levels. So the stop loss being 21.10, I think one can go bullish on Emphasis with the target of around 2,200. And the third is Britannia. It's been quite resilient in the entire correction in the market, a broader sideways consolidation, and one can initially, easily make around 3.5% on such counters. So stop loss will be around 44.90. One can go bullish on Britannia with the target of around 46.50. And these all three counters, once achieves the target, one can actually trail the stop loss and hold the position for long period of time also.
Well, quite a variety there, Kunal, from Reliance to Emphasis as well as Britannia. And those are the picks that Kunal has for our viewers. But let me thank both my guests, gentlemen Nikhil Oswal as well as Kunal Rambhia, for joining us this morning on Morning Trade. Well, that's all we have on this edition. But do stay tuned because coming up next is Opening Bell.